Good morning, everyone. Good morning. All right, so we had a pretty interesting day yesterday. We broke a lot of levels psychologically. It's a big deal. So we're gonna cover that. I won't be able to stay very long today, so let's just jump to it. So we have about 10 minutes of CPI. CPI numbers are pretty interesting, guys. Let me see if I'm gonna turn myself off. Audio, so we'll just do that. All right, so where are we exactly? And let's just jump to it. So don't know what CPI is going to predict, but yesterday in the chat I said we should be looking at the top because I noticed that in the longer time frames, this is what I wanted to point out, is that we were curling, right? We were curling, and if this breaks right now at CPI QT, then we can probably push it even lower. The key area we're going to be looking at is 3,800 for that to happen. Now, anything can happen on CPI. Are they going to be worse? Are they going to be bad? It's already priced in for the move yesterday. But yesterday was pretty significant in the sense that, it moved. It triggered a lot of the sellers that were right underneath there. Not to mention 40-40 was a big area. Mine is 40-40. There's other investors that got 40-52, 40-50. Ultimately, we're looking at the same area that we see a lot of congestion, a lot of order flow going into that area. 40-40 for me got taken out pretty fast, and that signals to me that there is a bigger selling. That this is not just retail selling. This is more orchestrated selling. Okay. So don't know what's, again, as I mentioned yesterday, there's 4 events that we had to be conscious of. This is event number 1. Event number 1 is it was XPX roll week, right? And we're in the middle of that. So just throw that in there. XPX roll week means that the futures traders are rolling out of their position and rolling to new positions. So that usually causes about a 50 to 100 point volatility swing, and we're still in that. We also have CPI today. CPI is going to be pretty big. We don't know what that number is going to be. Remember, it excludes food and gas prices have been in all-time highs, even higher than the 70s if you price in, the price of the dollar. So, what's going to happen with that? What's going to change with that? Don't know. Is it going to get better? I don't see it getting better. Is it priced in? I don't know. But one thing I do know, if it's higher than 9%, we can probably see 3,900 pretty fast. Okay, so above 3,900, 9%. If it's at 11%, we're probably going to go lower, like a lot lower. And again, and I'm showing this because this signals to me that during this process that we're going sideways, we see accumulation or distribution. We don't know what that is. That's why there's a lot of whipsaw action throughout that time frame. But yesterday, clearly, there was a lot of distribution, meaning that a lot of the funds were distributing their stocks. This is not just retail. Retail's been buying this thing all the way up, and they've been buying Amazon for the last 4 or 5 days because so retail is getting rug pulled right now. So be careful, guys. If you're following me, I've been calling this bear market for a long time. I've been calling this bear market, and just kind of letting you know, the Russell, everything is going down. Now, what can cause this to go up? All right, well, let's look at the flip side of things. If CPI comes in lower than 8%, if it comes in at 7%, 6%, then this could possibly maybe swing a little higher. But remember, that's going to be short term. We also have quantitative tightening on Tuesday. So remember, I'm not bullish. I've been saying that on my Patreon. I think swings will be going up, but I'm ultimately bearish. And that's also led to my trade yesterday of having a small position in a bear trade because that was my hedge and it was cheap. So that's why I did those trades. Now, as far as let's take a look. Jamin Dimon from JP Morgan even said that they have no idea what quantitative tightening is going to do to the market. So this is the biggest CEO, Chase Manhattan Bank, JP Morgan, actually saying that to you. He said that to you about 2 weeks ago if you listened. So Don't know. So I wouldn't listen to Kramer. You know, Kramer's telling people to buy these stocks at a bargain. They're bargain prices. Yeah, there'll be more bargain prices. So I will hold off, wait till this market settles before you go long term on anything. And that's my suggestion. If you are trading, learning how to trade, add more time. This is a very volatile market. You know, unless you're experienced and you want to go shorter term time frame, and trade less. Less is more. Build your account slowly. To stop going for the home runs. Start, you know, just going for the percentages. Those percentages add up. 5%, 10%, 20%. Where are you going to get that nowadays? Nowhere. So again, you know, do your best. But as far as right now, we'll look at what we did yesterday. You know, the VIX climbed, soared, and this is what I was talking about. Nothing was making sense. The last couple of days, VIX was up, this was up, market at close, the volume. But yesterday, it made sense. Yesterday, we had about over $500 billion market at close to sell. So that made sense, and it was in alignment with what the market was doing. But when the data comes out and the market doesn't make sense, it's usually something is brewing, and that's what we noticed. And that's what I meant in the chat. If you were on my chat, that's what I meant. All right, the data is going to be coming out pretty soon here. I'm not going to post. I'm only working on one computer, but I do have CNBC in the background. It's 4 minutes. So in the meantime, what I'm going to do, I'm just going to cover what we did. Yes, this is the Fibonacci, guys. This is the 1 hour. And in retrospect, guys, if you're in my class, I want you to study your trades. Go back again. You can revise it. There's also a button here that you can actually replay. It's right there. You can replay. And let me see if I'll circle this for you guys. I don't even know if it'll let me do that. But anyway, there's a replay button right there that you can actually go back, push on it, and replay the day's event. So yesterday, we did see weakness across the board. It came in later. This market, it was very orchestrated. They waited till the last minute to sell off. Now, what I wanted to say to my guys, if you're feeling the FOMO and you feel like, oh my God, I'm missing out, that's okay. You can always go back here, and this is this was yesterday's replay. Oh, I don't want to do that. Okay. Well, let me see if I can hide this for a second. That volume profile is getting to be on my nerves. So this is the replay yesterday. As you see it breaking down, and you're trying to. This is yesterday. No, it was not yesterday. And here comes the talking heads on TV. If you're okay, so we see the collapse here. If you're following me and you're trying to get in, you know the levels. We said 4070 is a big cliff. 4083, 4083, 4070. At this moment, you can be looking at where's the MACDs, where's the moving averages, where's everything going, and you can start getting into the position. Now, I don't mind you chasing a trade. I don't want you chasing a trade, but if you feel the ultimate need to chase the trade, number one, let's put some structure in that trade, and we're going to trade less. Okay, so if you're going to put structure in the trade, see where it bounces. You don't want to get into the bounce. You want to get it at the highest point, and when the MACD start crossing, right? So you want to see it bounce, cross up, and then get into the trade, and you're going to scalp the move downward. Now, just notice that the last one, you know, you're going to start overpaying for those options because you have to be quick, and also that the VIX is climbing. So that is working against you because it's causing you to overpay on those options. Just know that. So if you're going to be quick on the draw, you know, it's not where you're going to be holding on for a long, long time. You're just going to be saying, I'm going to take 10 cents. I think I can get 20 cents or 50 cents. 10 cents on SPY, $1, $2 on XPX. That's pretty doable. I've done that before where I just loaded the boat and just had, let me rephrase that. No load the boat, just took $1, $1.50 and taken it up because the last one will fail against you. Now, as far as today, the Asian market was kind of weak. I'll go longer term on this. You know, so the Asian market was non-existent and we just collapsed. So we're at 38.90, 38.80. CPI numbers just came out.
1% on the headline number, up 1%. That's definitely hotter than the 3/4 of 1% we were looking for. The high water mark there was up 1.2 in March, so we're close. And that 1.2 was a 17-year high going back to 2005. Strip out the all-important food and energy, it's still hotter than expectations, up 0.6%. It equals our look in last month, and to put a face on it, the high water mark here was all the way back in April of last year, up 0.9. That was a 4-decade high. But remember, both these are hotter than expected. Year over year, these are the Moneyball numbers. Year over year headline, 8.6. 8.6, a new cycle high, usurping March, which was 8.5.
All right, guys, just waiting.
Since 1981. Now 8.6 continues to be the highest since 81 because the comp there is 8.9 to 11.8%. And if we look at year over year core, also hotter than expectations, up 6%, following 6.2%. High water mark there, 6.5, and that was in March, and that was the highest since 1982. But remember, even at 6%, coming down from the high water mark of 6.5, that standalone is still the highest since 1982. So these are super stubborn numbers. And our panel, our esteemed panel, has lots of brain power there, and they go in lots of categories, Joe, as to why inflation's here, the all of the above mentioned. I will say that out of all the above, energy, energy, energy. And you know, there's so many comments here about, oh, the administration could only do so much. You know what? We all said that about the Fed. And then there's this thing called forward guidance. So the Fed gets the market to do things long before it takes action by telling them what's in their head, what lies down the road. What was the forward guidance with this administration on energy? We know the answer. Maybe they can't get things to happen faster, but by giving positive forward guidance, by not closing pipelines, by not talking...
All right, so the news is very negative, guys. Obviously, you hear TV media not helping out.
Right to our panel, but I don't think we've talked to Mike yet. I know I'm taking a risk going from Santella to Santella, even for me to get it right. But Mike,
all right, guys. So market's declining here. So we got 30. If you're on the chat, I'm gonna forward you. I got the CPI report right now, so it's coming to you on the chat right now. So if you want to read it, I'm gonna actually dive into it tonight. But it's on there for you guys to enjoy, not to enjoy. Guys, we're going down. Let's see what this thing happens. All right, so I'm gonna give you this. Anything's gonna happen in the next hour. We're dropping. We got 3,900. 4,000 got taken down. We're going to have to go down. Probably we'll hit 3,900. So at the open, let this thing drop. We got a fresh set of MACDs. We're dropping right here. And so basically, we're dropping. Let it drop. Let's catch some waves. We have to basically now just chill, relax, wait for the consolidation that's going to happen. This is the panic sell. We're probably going to get this in about the next hour to 90 minutes. Get your options ready and get to rock and roll. We're going to probably have to be paying at the bid or overpaying at the bid, or I'm sorry, at the ask, to get into these options really fast. But congratulations, you've been following me. You got into some puts. You're making some money right now. I know I am. All right, guys, congratulations. I'm out. I'm gonna have to take off. But in the meantime, here we go, guys. Let's go get it. I don't know who is out there. Josh, what's up? What's up, skaters? What's up, skaters? And what's up? All right, guys. All I want you to do, guys, let's set up these trades. There's going to be some movement. It's going to be quick, but it's probably going to be squeezes. Look for the squeeze at the hour. This is going to last for another 60 minutes. There will be a consolidation period. There will be a basing period. Just wait for it. But the news is negative, guys. There's nothing really positive here. The 10-year just collapsed. It just went up to about, not collapsed, went up. It went up to about 10 point something percent. Gas is high. The market cannot handle gas prices this high. Okay, so the market price can't handle gas this high. It just can't. It can't do it. So, all right, guys, take care. I'll see you guys in the chat. I'll be in and out. today, but I'll try to catch the morning hour. All right, take care. Bye bye.